Right at this exact moment, while you are scrolling through your phone and complaining about the skyrocketing cost of living, there is something massive happening in the shadows. $124 trillion are quietly changing hands. That is not a typo. That number is larger than the entire economic output of every single country on Earth combined. It is more than 5 times the current national debt of the United States. To put that into perspective, if you spent $1 million every single day since the birth of Christ, you would not even be close to spending $1 trillion, let alone 124 trillion. But here is the brutal truth that nobody on Wall Street wants to tell you. The masses out there are just sitting around waiting for a handout, dreaming about some massive inheritance party from the older generation. They think they are about to be saved by a magical check in the mail. They are completely wrong. The biggest financial illusion of the decade is unfolding right now, and if you do not know how to extract wealth from this financial tsunami, you will be permanently trapped at the very bottom of the wealth pyramid forever. Today, I'm going to show you exactly how this money is moving, why the conditions perfectly mirror previous wealth creation events that minted millions of new millionaires, and the 3 specific steps you need to take to position yourself and become a millionaire from the ripple effect, even if you do not have a single wealthy relative to your name. The mainstream media is constantly brainwashing you into believing that millennials and Gen Z are about to become the richest generations in human history simply because of inherited wealth. They paint this beautiful utopian picture where everyone gets a massive inheritance check, pays off their student loans, and buys a beautiful house in the suburbs. Do not let them manipulate you. Let us look at the actual historical math, because math does not care about your feelings or your media narratives. The baby boomer generation, those born between 1946 and 1964, currently controls a staggering $78 trillion. That is 52% of all the wealth in the United States concentrated in the hands of one single aging generation. How did they get so rich? They rode the greatest economic supercycle in human history. They bought real estate in the 1970s and 80s before prices detached from median incomes. They benefited from a 40-year decline in interest rates that pumped up the value of every single asset class. They rode the massive 1980s bull market, the dot-com boom, and the post-2009 recovery, and as the youngest boomers cross into their 60s and the oldest approach their 80s, that accumulated money has to go somewhere. Over the next 2 decades, this wealth will transfer to their children, their grandchildren, and to various charities. Generation X stands to inherit around $39 trillion. Millennials are supposedly looking at $46 trillion. Even Generation Z will begin receiving significant capital as this transfer accelerates. The narrative sounds absolutely beautiful, right? Grandma and grandpa pass away, and suddenly millions of struggling young adults who cannot even afford rent or basic groceries are handed the keys to financial freedom. But here is the twisted reality that the headlines conveniently ignore. Data from Cerulli Associates Research points out a devastating fact that destroys this entire fairy tale. 62% of that massive wealth transfer will flow exclusively into the pockets of the top 2% of ultra-high net worth households. Let that sink in for a second. The wealth transfer is highly concentrated and deeply unequal. It is not a democratic distribution of money that will save the middle class. The system is functioning exactly as it was designed to function. The vast majority of normal families, the middle class and the working class, will receive absolutely nothing. Well, maybe they will get a used sedan, a few $1,000s in a checking account, and a pile of unresolved medical debt. Relying on an inheritance to solve your financial problems is literal financial suicide. It is a scam designed to keep you passive while the real players position themselves to catch the overflow. Think about the psychology here. If you are secretly banking on a windfall that statistically will never arrive, you stop hustling, you stop building, you stop aggressively investing your own capital because you think your financial salvation is just around the corner. You fall into the trap of absolute complacency. And that is exactly what the institutional investors and the ultra-wealthy want you to do. While you are waiting for a mythical check in the mail, they are building massive financial nets to catch the $124 trillion that is about to violently flood the economic system. You see, the true generational opportunity is not in the inheritance itself. It never was. The real magic, the stuff that actually mints new millionaires out of thin air, happens when that unprecedented amount of capital starts moving. Money is energy, and it never just sits still. When trillions of dollars change hands, it gets liquidated. It gets reinvested. It gets spent on luxury goods. It gets moved from old, decaying conservative assets into new hyper-growth sectors. It gets poured into real estate, into fresh startups, into new technologies. Every single dollar that moves creates an opportunity for a prepared investor to capture a fraction of a percent of that transaction. This is what we call the ripple effect. The closest historical parallel we have to this is the post-World War II era, when returning soldiers used the GI Bill to buy homes and start businesses, completely transforming the American economy and birthing the modern middle class. But what we are looking at right now dwarfs that event by a massive factor of 25. And this time, the capital injection is not coming from the government printing press or the Federal Reserve. It is coming from the wealthiest demographic cohort in human history, finally unlocking their vaults. If you understand where this money is flowing, you do not need to inherit a single dime. You just need to stand firmly in its path. You have to stop thinking like an heir and start thinking like a toll booth operator. So, if your grandparents are not leaving you a mansion in the Hamptons or a massive trust fund, does that mean your financial future is completely doomed? Absolutely not. The real generational wealth is not hiding in a sealed envelope at a lawyer's office. The real opportunity lies in the chaotic, massive, and completely uncoordinated reallocation of capital that is already beginning to happen right under your nose. When $124 trillion moves from one generation to the next, it causes a seismic shift in asset prices. Think back to the stimulus checks during the pandemic. The government printed a few trillion dollars, handed it out, and suddenly every asset class on the planet, from used cars to digital assets, exploded in value. Now imagine an economic injection that is 25 times larger, but instead of being driven by short term government policy, it is driven by the structural death and aging of the most affluent generation in history. This money does not just evaporate into thin air, it goes directly into the economy, it buys new homes, it starts new companies. It gets recklessly spent on luxury goods and vacations. But more importantly, it gets completely reallocated across different investment vehicles. Let us break down exactly what happens when a baby boomer passes away and leaves a $3 million stock portfolio to their three millennial children. Those children do not just leave the money sitting there, they liquidate it. They sell the assets to pay off their own student loans, to buy their own homes, or to fund their own lifestyles. But the money that they do keep invested gets completely restructured. And this is where the generational conflict creates your massive opportunity. The money is literally changing its appetite. For decades, the baby boomer generation has parked their wealth in safe, predictable yielding assets. They love blue chip dividend stocks. They love legacy energy companies. They love traditional mutual funds and government bonds. But the people inheriting this money have a completely different psychological profile. According to extensive research from Bank of America and Merrill Lynch, 72% of investors between the ages of 21 and 43 believe it is no longer possible to achieve above average returns, relying solely on traditional stocks and bonds. Let me repeat that because it is the absolute key to your future wealth. Nearly three-quarters of the generation receiving this massive wealth transfer fundamentally reject the investment philosophy of the people giving them the money. They do not want your grandfather's utility stocks. They do not care about a steady 4% bond yield. They have grown up in an era of rapid technological disruption, high inflation, and severe economic instability. Their risk tolerance and their vision for the future are entirely detached from the past. So, what happens when millions of heirs finally get their hands on trillions of dollars currently locked in old school conservative portfolios? They are going to hit the sell button. We are going to see one of the greatest mass sell offs of legacy assets in modern financial history. And where is that tidal wave of liquidity going to flow? It is going to flood directly into alternative investments. It will be aggressively pumped into artificial intelligence infrastructure. It will flow into private equity, clean energy innovations, biotechnology, digital assets, and crypto networks. Entire sectors that barely existed 20 years ago are about to be violently supercharged by a wall of inherited millennial and Gen Z capital. If you understand this massive rotation of capital, you can front run the entire wealth transfer. You do not need to wait for the inheritance. You just need to build your portfolio around the exact asset classes that the younger generation heavily favors. You stand by the new watering holes and wait for the herd to arrive. Because when trillions of dollars rotate out of old industries and into new ones, the price appreciation in those new sectors will be astronomical. And the crazy part is you can position yourself today before the bulk of this money has even moved. But the stock market is only half of the equation. If you are planning to blindly buy a house for investment this year, hoping to ride the real estate wave, you need to wake up right now. You might be holding a literal ticking time bomb. The great wealth transfer is going to completely rewrite the real estate map of the United States, and it is going to be a bloodbath for the uninformed. For the last 40 years, real estate has been a relatively simple game. You buy a house, you wait, and the price goes up. But the demographic cliff is about to shatter that illusion. Baby boomers currently sit on nearly $19 trillion of real estate wealth. They own massive four-bedroom houses in the suburbs and properties in aging retirement communities across the Sun Belt. As this generation ages out of these homes, we are going to see an unprecedented surge in housing inventory hitting the market in very specific geographic areas. Millions of properties are going to be listed for sale simultaneously by heirs who have zero interest in living there. Imagine a millennial who lives in a major tech hub inheriting a large, outdated house in a rural retirement community. They are not going to move there. They are going to list it for sale immediately to get the cash. When supply massively outstrips demand in these specific zip codes, prices will stagnate or completely crash. If you are holding an investment property in a boomer-heavy market, thinking it is a safe bet, you are playing a very dangerous game of musical chairs. But flip the map over, and you see the exact opposite scenario unfolding. The heirs receiving this wealth are going to take that liquidated cash and aggressively bid up real estate in entirely different markets. They are moving to emerging tech hubs, to cities with vibrant cultural scenes, and to areas that cater to remote work and a modern walkable lifestyle. In these specific youth magnet cities, the influx of inherited cash is going to cause bloody bidding wars. We will see home prices detach entirely from local median incomes because the buyers are not using their standard salaries to buy the houses. They are using their grandfather's liquidated stock portfolios to make all cash offers over the asking price. The same $500,000 deployed in Austin, Texas, versus a declining Rust Belt city will produce dramatically different outcomes over the next 2 decades. Geographic awareness is no longer just a real estate strategy. It is a fundamental survival skill for the great wealth transfer. You have to buy where the inherited money is going, not where it is leaving. You have to position yourself ahead of the migration. So if you do not have an inheritance coming and you are terrified of picking the wrong real estate market, what do you do to survive? You cannot just freeze like a deer in headlights. The simple formula to become an everyday millionaire right now does not require an Ivy League degree or insider information. You just need to aggressively position yourself in the path of the capital flow. Let us go back to the story of Margaret, the schoolteacher, in 2009. She did not need to know a complicated algorithm to get rich. She did not need to build a startup. She did not try to time the absolute bottom of the market. What she did require was extreme discipline and the courage to ignore the noise. She deployed her $50,000 when the entire financial system felt like it was crumbling. Lehman Brothers had just collapsed. Most Americans were completely terrified and losing their homes. She bought into a simple S&P 500 index fund. Her family begged her to stop. They thought she had lost her mind. But she recognized that the chaos, the fear, the headlines screaming about the worst economic depression since the 1930s were actually the greatest buying signals of her entire lifetime. Today, her investment is worth nearly $600,000. The Great Wealth Transfer is just a slower, stealthier version of 2009. There is a massive river of money moving, but it is not happening in a sudden crash. It is a 25-year structural shift in the foundation of the economy, and the way you profit from it is by creating a parasitic relationship with the transfer of wealth. You do not wait to inherit the money. You set up the infrastructure to process, manage, and catch the money as it moves. The people who got incredibly rich in the gold rush were not the prospectors digging in the dirt. They were the ones selling shovels, blue jeans, and pickaxes to the desperate miners. Right now, millions of baby boomers and their heirs are going to need help managing this massive transition. Look at the explosion of demand for estate planning, for tax advisory, for legal services. Think about the entire wealth management industry. Trillions of dollars have to go through lawyers, through trust administrators, through tax specialists before they ever reach the hands of the younger generation. The transfer is heavily taxed, heavily regulated, and extremely complex. If you want a slice of this pie, you pivot your career or build a side hustle in the exact industries that facilitate the movement of capital. That is how you intercept the wealth transfer without inheriting a single dime of it. You become the toll booth operator on the highway of money. Furthermore, you must optimize your tax-advantaged accounts immediately. The $124 trillion is going to supercharge the economy over the next 2 decades. But if you try to capture that growth in a standard taxable brokerage account, the government will bleed your returns dry every single year. You have to use the legal tax shelters available to you. You max out your 401k, you max out your IRA, you use an HSA if you are eligible. These are not boring retirement tools for old people. They are tax-free compounding machines that allow you to participate in the wealth transfer without paying a massive toll to the IRS. In 2026, the contribution limits are massive, and if you are aggressively funding these accounts, you are legally hiding your wealth from the taxman while it grows alongside the broader economic expansion. Every dollar you shelter now will multiply tax-free as the wealth transfer accelerates. And while you are doing this, you have to develop the mental fortitude to ignore the terrifying macro news cycle. There will be constant crises over the next 25 years. We will see recessions, geopolitical conflicts, and sudden inflation spikes. The media will constantly scream at you that the world is ending and that you need to sell everything and run to safety. Do not do it. Goldman Sachs data proves this mathematically, and it is terrifying. If you got scared and missed just the 25 best days in the stock market over the last 15 years, you literally cut your total returns in half. Think about that for a second. Missing less than 1 month of trading out of 15 entire years destroyed 50% of your accumulated wealth. And those best days almost always happen right in the middle of the most terrifying periods, when everyone else is panic selling and the news is predicting total collapse. You stay invested through the volatility because the underlying force, the $124 trillion seeking a productive home, is more powerful than any short-term panic. This transfer of wealth is a massive 25-year tailwind for asset prices. It is a marathon, and it is already underway. You cannot time a demographic shift. The oldest boomers are hitting 80 right now. The transfers are happening every single day, right while you are watching this video. Waiting for a perfect entry point is the worst financial mistake you can make. The longer you wait, the more compound interest you sacrifice to the people who are already positioned. Just like in 2009, the information is completely public. Everyone has access to the data. But just like in 2009, the vast majority of people will fail to act because they are paralyzed by fear or distracted by short term thinking. They will watch the wealth transfer happen and wonder why they did not get rich. You now have the complete playbook. You know the true scale of the transfer. You know it is heavily concentrated in the top 2%. You know the capital is rotating out of old legacy sectors into new technological frontiers and new geographies. And you know the specific strategies to position yourself to capture a fraction of this monumental shift. The only variable left in this equation is your action. Are you going to be one of the millions who looks back in 2 decades and realizes they slept through the greatest wealth creation event in human history? So let me ask you a very direct question. Leave a comment below right now. Are you preparing to catch this massive tidal wave of money with index funds, with crypto, or with real estate? But hold on for just 1 second. There is one specific asset class that the ultra wealthy are desperately hoarding right now, quietly accumulating it before the inflation completely devours everything else. And no, it is not physical gold. I am going to expose exactly what they are secretly buying in next week's video. Make sure you hit subscribe and turn on the notification bell right now if you do not want to be the one left holding the bag when the real crash comes.